Hi everybody and welcome to the Recession project. This is our first video, brand new channel, and the only sole focus of this channel is to help you protect yourself financially. That's why we're here, and it's crucially important that I get this video out now, like literally today, because any day now, certainly in the next few weeks at absolute most, but potentially any day now, all the major financial markets are going to take a plunge downwards. That includes the Nasdaq composite, the Nasdaq 100, the Dow Jones, the S&P 500, all the major financial markets in America. But then that'll also have a knock-on impact to the rest of Western Europe, like the Ftse 100, the AIM, the DAX in Germany. We're going through a period right now where most of the major financial markets in America have broken records for longest amount of weeks in a row in a bull run, which basically means the market moving upwards, basically in the history of time. And we are, for a number of different reasons, looking at a number of different factors, about to move down sharply. Between now and Christmas time, in the next 3 or 4 months, all major Western financial markets are going to move down between 10, potentially as much as 20%, probably in the range of 10 to 15% move down before we start moving aggressively back upwards for the next couple of years. This channel, the purpose of this journey is to try and build a community of people who are appropriately positioning themselves to, one, survive what's going to be probably the biggest crash in the history of Western economics. Something similar to the Great Depression of the late 20s is going to occur probably around 2020, 2021. This is based on a plethora of factors, and it's not just crazy talk, shouting nonsense. One book I would recommend that you read, I'm reading at the moment, is by a guy who predicted the last recession, 2007, 8, 9 recession, a guy Peter Schiff. It's called The Real Crash. Sorry, that's backwards, but I'm just seeing it in the camera now, it's like mirror mode, but yeah, it's called The Real Crash by Peter Schiff, and it's a brilliant book, and people need to start paying more attention to what's happening in the real world. It's terrifying when you first hear about it. It is terrifying, and understandably so, but the more you become informed, the more you realize that there are genuine opportunities to not only survive market fluctuations, but to actually profit from them. This channel, we're going to look at a number of different things, and my hope is that, look, I'm not an expert in any of these areas. Small bit about my background. I've been working in finance and IT for the last few years. Financial engineer is my technical title. I've been working in Dublin in Ireland for the last year or so. Prior to that, I was working in a merchant bank in South Africa, in Johannesburg. And before then, I was working in audit and accountancy for a few years. I've always been really interested in financial markets, specifically recessions, because in the last recession, I was a good bit younger. I was only like 17 or something at the time, and a relative passed away, and I was left with, I think it was something like £2,000. And when I had this money then at my reach, I saw a company, a bank called Northern Rock, a UK bank based in Newcastle in England, and its share price was dropping like a stone. It was flying down, and I just assumed that, look, a bank of this size is not going to become nationalised or crash or whatever, it may be. I didn't really know the ins and outs then, and I thought, look, this is a brilliant opportunity to buy shares in this company where its shares are rock bottom. And I bought, with all £2,000, I bought shares in Northern Rock. About 2 weeks later, I got a letter from the government, the British government, saying, unfortunately, your shares have been nationalised now. The company's been nationalised and your shares are worthless. So that's how you lose £2,000 very quickly, which was a hell of a lot of money to me then. It's a lot of money now. But yeah, from then, I've been really interested. I was always interested in economics, business studies in school, and financial markets, capital markets, but from then I've been really interested in not necessarily just when things are going well, but when things are going poorly, and how to benefit in those scenarios and how to survive those scenarios, because it hits the vast bulk of the population like a bullet in a really negative way. And there are a lot of things you can do to make sure that you dodge those bullets and you make those bullets potentially work for you. So what we're going to discuss, my hope for the channel is to, like, as I said, I'm not an expert. I've done a hell of a lot of research in a range of different areas. I'm really passionate about it, and I hope to become an expert in all of these areas. But what I want to do is to reach out. There are people with channels relating to precious metal markets, i.e. gold, silver, platinum, palladium. And I want to reach out and have conversations with them about the recession. What do they see things happening in the next couple of years? I want to reach out to chartists. There are some brilliant investors and traders who I've been following closely in terms of their views on major financial markets and major and the cryptocurrency markets over the last year or two. If you follow on YouTube, there are two brilliant guys. One, his Twitter handle or his YouTube account is Financial Freedom. I think the guy's name is Nazir Jones. He literally predicted way before Bitcoin was anywhere near the value that Bitcoin would reach $20,000, and then he predicted following that it would crash the whole way down to, I think it was something like $2,500. Currently Bitcoin's sitting at $6,000, and it's looking likely like it's going to move significantly further down. So this guy's brilliant, and what he predicts in terms of financial markets as well, through a range of different things such as Elliott wave theory and Fibonacci theory. There's different mathematical and economic theories that are used in addition to looking at normal things like volume, looking at where money's going in relation to different markets. And another fella, Crypto AMD, the two of those guys are buddies, and they're both very, very good at their chart analysis. So yeah, maybe follow those channels, but those are the sort of people I want to reach out to and start having conversations with in terms of trading theory. I want to reach out to people in precious metal markets. I want to speak to more leading people in cryptocurrency markets, because these are all important factors. These are all interlinked. You know, most people would assume that major financial markets have an inverse relationship with cryptocurrency markets, i.e. when normal stocks go up, cryptocurrency goes down. That's meant to be the theory, because crypto is meant to become a replacement for fiat currency and become digital currency, the currency of the future, as opposed to dollars, yen, euro, sterling, you know, things like this. But in actual fact, at the moment, people don't really care about cryptocurrency. Most people involved in cryptocurrency markets are doing it and using the market as a speculative market in order to increase their dollars or increase their sterling. So if I buy Bitcoin or one of the other, like if I buy Ripple or Verge or Stellar or EOS or any of the other cryptocurrencies, the reason I'm doing it is to get an increase in the value of the cryptocurrency so that I can sell it and get more pounds. Or someone in America would be doing the same thing to increase and then sell it and get more dollars so that they can buy things and that they're more financially secure. At the moment, major financial markets and cryptocurrency markets actually have positive correlation, i.e. when one goes up, the other goes up. When we see a crash in the next couple of weeks, potentially any day now, in all major financial markets, you better believe when people are panicking and selling their shares, their stocks and their shares, that they're also going to panic and sell their cryptocurrencies. That's what's going to happen. People are then going to consolidate what they have. They're going to take a step back and think. They're going to be like, oh, my, you know, all the shares that I have or my pension plan have all just crumbled by 10-15%. And they're going to see cryptocurrencies bottom as well. And that's when everyone's going to assume, oh, crypto's dead, or I wouldn't invest in that now. I've just lost a load of money in the real world in my stocks and shares. And that's going to be actually the perfect time to get involved in cryptocurrency, because it's such a volatile, strong market. And the vast majority of people, like the vast majority of people, everyday people, haven't gone near that market, nor do they understand anything about it, nor do they particularly care. But when more and more people get involved through this next bull market, which is going to come soon, because we're like 9 months into a bear market in cryptocurrency, from basically the start of the year to now, September. When more people get involved in the bull market as it ramps up and everyone starts hearing, oh, did you hear about Steve made 100 grand? Or did you hear about Tim made 50 grand there? You know, then people are going to start throwing their money at it that's going to significantly boost the market capitalization of the cryptocurrency market. It's going to be stronger than ever, and a lot of people are going to make money. And then it's going to go back down again. That's the way it's going to go. It's a really volatile market. I don't know if it's going to be what's used, digital currency, long term, but certainly for the next couple of years, purely from a speculative trader's point of view, it's going to fly up at least temporarily, and money can be made in this. Now, when the inevitable full crash comes in 2020, 2021, roughly around then, literally the housing market, people don't realize that the housing market is a market like any other market. The problem with the housing market is, in terms of people's difficulty to see it as a normal market, which it is that it's a very slow moving, elongated market, which is moving slowly over time. And it's been basically, on average, steadily moving upwards since like the early 1950s. There was a significant correction in like 1990, there was a recession there, and then there was a significant correction in 2007, 8, 9. And, at the time, that seemed like a massive thing because people are very short term in terms of their mindsets when it comes to money. But if you look at that in a wider range and the amount of, the value of property from the 70s, 80s, 90s, 2000s to what happened in 2007 compared to those decades, the house market was still massively high. And a lot of people in a lot of different areas in the world think that housing markets have not recovered. But in fact, if you look at the average houses in America, if you look at the average houses in the UK, we have now surpassed the level at which it was at whenever the crash, the last recession occurred, the Great Recession occurred. Let me, just on that note, I was reading a book about the First World War a few days ago, and I found it interesting. They call, I just clicked in my mind, they call World War One the Great War. It was known as the Great War. And something like 16 million died. And then the next war that came along, World War II, something like 60, in the region of 60 or 70 million people died. So we've just come out of the Great Recession, the Great War, the Great Recession. The next one's going to be exponentially worse, just as World War II was to the Great War. This crash will be exponentially worse than the Great Recession was. But anyway, what you're going to want to do then, sorry, we're talking about house markets, and then I'll talk about gold after, but basically, if you think about everyone that you know, every family that you know, nearly everybody owns a house. If they're doing well, they own a house, but the house is, has a massive mortgage, which effectively the bank owns. And people have this weird thing in their mentality where they just think house market or house values will always increase, as a norm, except for the odd fluctuation. But in general, over time, house markets will always increase. That's just not true. That's not how markets work. And because it's happened for so many generations, it's gone up. People are naive to it, they're numb to it. They don't realize that they can crash down just as heavily, right? There's something that we'll talk about again in another video. If you look specifically at Elliott wave theory, it almost fits the theory to a T. If you look at the wave one of the theory is basically whenever the market starts an upward bull run, that would have been like the 50s, 60s, 70s, where people were buying houses that were, by today's prices, they were cheap as chips. If people knew then how much house prices were going to increase over time, you would have bought as many houses as you physically could. You would have overstretched yourself to ensure, because you would have known that, I'm going to make loads of money on these houses. We're now at the end. We're basically, if anyone knows anything about Elliott wave theory, if you look at the charts, we're approaching the end of a wave 5, and then Elliott wave theory suggests that after the end of wave 5, there's an ABC correction and basically a crash. And that's what we're moving towards now. And what's going to happen is, say the average person, it's not average, but just as a hypothetical, say the average person has a $300,000, we'll say, dollar house. They've done really well. They own $100,000 worth of that house, and they have a $200,000 mortgage. That basically means they owe the bank $200,000. and the value of their house is $300,000. Now, the underlying assumption that everyone has, because everyone for the most part are sheep in their actions, they assume that the value of that house will continue increasing over time. But what's going to happen in the next few years is there's going to be a significant crash, because when the cryptocurrency markets, after spiraling upwards, when they have a massive crash, it'll coincide with a massive crash in the major financial markets, which you better believe will coincide with a major crash in all housing markets. And then suddenly your $300,000 house might be valued at something like £100,000 or dollars, or even less. And yet you still owe $200,000 to the bank, and everyone's going to be burned. Everyone who's not taken the steps to, position themselves smartly will be burned. And the whole purpose of this channel is to build an awareness and an understanding of steps that you can take to make sure that you're not that person being burned. You're the one who's laughing and going to benefit from it, going to ride out the storm and benefit from it. There are other things. Yeah, so basically the only inverse relationship that there is effectively with major financial markets are the precious metal markets, which have been taking a beating for the last 5 odd years, because when financial markets go up, they typically go down. They have an inverse relationship. However, whenever they crash, you're going to see the true value of gold. It's going to go through the roof. It's funny, the amount of money that the Fed in America and has been pumped out of the UK Treasury. These countries, whenever they have difficulties financially, they choose to print and pump out more money into the circulation. Which, if you think about it, if a country has $10, there is a value for each of one of those dollars. If they just decide to print another $10 and say there's $20 in that country, now that dilutes the value of each of those individual dollars. It halves the value of each of them if there's now 20 in full circulation. And that's effectively what's happened in basically all countries, especially all countries that follow the Western economic approach over the last several generations, really. And yet the value of gold, which is a constant, you can't print any more gold. It's been suppressed and suppressed and suppressed. And whenever eventually there's an explosion and there's a crash, then the value of gold and silver and precious metals will shoot through the roof. Particularly gold, so the one that you're going to be wanting to look at. I think it's the most rare. I don't know, it might be platinum or palladium, but anyway, those markets are going to shoot up. This all comes down to credit, by the way. Peter Schiff in his book, it's an interesting way he looks at it. He says that, so there was a stock market bubble which popped, but it crashed in 2000, 1999, 2000. He says, and it's a smart way of looking at it, that in pure financial markets, the best thing that you can do in that sort of scenario is allow the market to completely pop and unravel, and then we'll go back up again from square one. The worst thing you can do is to try and artificially protect it and inflate the bubble some more, because eventually it's going to pop properly. And the longer that it takes, the more that you blow air into that bubble, the worse it's going to be when everything unravels in the end. So he said there were effectively 3 bubbles, and we're currently in the 3rd one. So initially there was a stock market bubble which crashed in 2000, but was propped up, he said, by a housing market bubble, which makes sense. Everyone was pretty much getting houses, mortgages that they couldn't necessarily afford to pay back. They were, in many instances, buying a second house on, through remortgaging their first house, and so on and so on. So the stock market bubble of 2000 became the housing market bubble of 2007, 8, 9, and he says that now we've moved into a 3rd tier, a government bubble. If you look at the States, for example, they have something like a deficit of $20 trillion. The debt of major Western countries towards countries like China, it's extraordinary. And effectively the banks were bailed out, in the UK, in America. And this is a knock-on effect to countries like Ireland, to all countries in Europe and across the world, really. So whenever the major governments didn't allow the last recession to properly pop, but they bailed out different institutions, financial institutions and banks, This propped things up, and now it's created a government bubble. And once it pops in the next couple of years, there's going to be no one or no institution left to prop up the government. It's just going to be a proper full burst. And basically, a lot of it comes down to credit. You know, I saw a funny statistic the other day. In 2017, the average UK household spent something like £900 more than it earned, which is insanity. Now, if that's not the definition of a culture of credit, I don't know what is. So, and that's another funny thing, because people assume low unemployment figures are a good thing and a sign of a healthy economy. But if we're going through a period right now where there are record levels of unemployment, where everyone has a job, and everyone who has a job has access to credit, because you go into a bank and say, look, I got a job, can I have a 10 grand loan to buy a car? Can I, get a mortgage? Because I have a job, I have money coming in, it's okay, I'll be able to afford repayments. When you're in a culture of credit and you have record levels of employment and employed people who can avail of this credit, that's a recipe for absolute disaster. So last year we had a record amount of people employed, and people on average were spending more money than they earned. What's sustainable about that? It's not. And the funny thing is, if you watch mass media, if you watch Bloomberg or CNN or BBC, people cry about fake news and things like this. It's bloody true. If you watch mass media, you do not get rewarded with your loyalty for watching these stations with what's actually happening. Like, pretty much always the contrarian view is the correct one. So whenever you see in a few months Bitcoin is dead, take that as a signal to buy Bitcoin and cryptocurrency. At the moment we're seeing things like, oh, we're going through the best time ever, in terms of the economy, markets, longest bull runs ever. Yay. That's not a good thing. That means we're exponentially high, and whenever values get that high in terms of stock markets, there's no one left to buy. And everyone and traders start to look at selling, and that's going to happen. They're going to short sell, and the market's going to move down. They're going to move down heavily for the next few months. I'm actually going on holiday this Saturday, and I'm concerned. I wanted to start this channel, and I've kind of done this video in a rush because I'm concerned that if I don't get the video done like now, I'll miss the window for when everything falls. So I figured that if I put the video out now, whenever the market falls in the next couple of weeks, you'll start to realize, man, maybe this mug with the beard and the shit hair sort of knows what he's talking about. So yeah, I had a lot of things scrambling in my head there in terms of what I wanted to talk about. Probably missed some things. We'll probably get on to other things after. But for the most part, that's roughly what we're going to start looking to talk about, these sorts of things. But yeah, I want to start talking to people who are legitimate experts in their fields, as opposed to me just purely giving my opinion and things. But it's not my opinion, it's the opinion of all these other experts that I'm discussing. And I'm just trying to round the overall discussion and package it in a way that's somewhat easy to understand. I'm rambling. Yes. Please subscribe to the channel. If you have any feedback, positive or negative, any interaction, I'd really appreciate. This channel is going to be useful. People say things like, oh, I spend too much time on YouTube. This is the sort of thing you want to be spending time on. So I'm not sure, I haven't created an icon yet or anything, but I will eventually have a little button to click where you can hit subscribe. Please do, please share it, please tell people, and we'll get the ball rolling here. Hope you're all well. The sun is shining, as you can see behind me. Hopefully that continues for some time, financially as well as physically out there in the world. All right, I'm talking rubbish. Cheers. Bye.